Fact or fiction? VA buyers are weak buyers. Now, whereas I am not Sherlock Holmes or Jessica Fletcher or even Inspector Clouseau or Clouseau, the Pink Panther detective guy, I do really enjoy uncovering the truth. That's exactly what we're going to do. We're going to figure out if it is a fact or if it's fiction that VA buyers are weak buyers. Where a lot of this stems from is because a veteran buyer or an active duty service member that is buying a house, they're not required to have a down payment on that house. I don't know how much more skin they could have put in the game if you follow my drift. Again, some of our service members came home with missing limbs or mental disorders. Some of them didn't come home at all. One thing I will remind a listing agent of when they say something along the lines of the veteran not having a down payment and therefore they're reluctant to take that offer is, again, I'll remind them whether it's a conventional loan, an FHA loan, a USDA loan, or a VA loan, if for any reason, God forbid this to happen, but if for any reason the loan transaction falls through the cracks and cannot go to closing, does the seller get the down payment? No, they do not. They might get the earnest money. Now, let's get into some of the fine details of a veteran or active duty service member. Most veterans have over $25,000 in their bank account. Why is that? Well, remember, our brothers and sisters in arms were trained, highly trained in the military. So when they depart or separate from service, they have a skill set. They have a skill set that has equipped them for the real world. And that allows them to find jobs that are paying well or to go into business for themselves. And if they get the right business, they make money. Let's talk about credit scores. Most buyers using their VA home loan benefit have a credit score at or above a 720. Most conventional buyers have a credit score at or above 720. As we know, most FHA buyers are below a 680. Now, you may not know this, but mortgage lenders love VA loans. And I mean, they love those loans. The question then is why? Why do they love VA loans? Well, it's because less than 2% of veterans that hold a mortgage default on the mortgage payment. Meaning, default is when you miss a payment or miss multiple payments and quite unfortunately sometimes have to go into foreclosure. Whereas a conventional buyer sits somewhere between 7 and 8% of default. Now, what about income? Is there any disparity there? One thing that I came across recently, and I think is pretty cool, is that for veteran buyers, and in this case, I am talking about those that have actually separated from service. A lot of these veteran buyers have an income north of $100,000 per year. The average income for a conventional buyer is less than $90,000 per year. Let that sink in just a little bit. So we talked about some pretty good topics here. We discussed why veteran buyers and active duty service members are not required to have a down payment. We talked about the money they have in the bank. We talked about credit scores, and we talked about income. So I'm going to put this in your hands and let you be the judge. Fact or fiction? Is a veteran buyer a weak buyer? Leave a comment and let me know. See you tomorrow. Zero sugar sun kissed is good.